Up in a lot of the cannabis-related stocks, whether it's Aurora or Canopy Growth, Aphria. You can see all three continuing their red-hot run. And while some of these stocks could continue to climb as we get closer to legal recreational cannabis in this country, our next guest says at least a few names are at risk longer term of even going bust. Kerm Malik is with Jacob Capital Management, and he joins us here in studio. Nice to see you.
Good morning.
So just explain what you do at Jacob. You're working with a whole host of companies that are trying to figure out how to grow quickly in this fast-changing environment, I guess.
Exactly. Previously, we worked with a lot of the early companies that are now the big companies in the space, and now we're working with the next wave of companies to position them in a way that they can survive this potential, day of reckoning coming late 2019, early 2020.
And I think, what's so interesting, I feel like sometimes there are some parallels to what's happening in marijuana to cryptocurrencies. People look at, Bitcoin, they look at Canopy the way they look at Bitcoin. They say, wow, look at that run up, but boy, what if I got in at a really early stage? So
right.
What do we have to think about with all those secondary players who are now jumping into the industry?
Well, I think you've got to look at what the long term is going to look like and then work our way back. So we're going to go live somewhere in the summer this year with recreational cannabis. There's going to be a supply shortage for quite some time, probably well into late 2019, because it takes a while to get production up and running, even if there are over 200 licenses. But at some point when supply normalizes, then these things are valued on the fundamentals of their business and cash flows. The big guys are going to swallow the small guys, and there'll be probably 4 or 5 large companies left with a couple of niche, boutique sort of craft growers as well, and that's it. From 200 licenses, you're going to be down to a dozen or 2 dozen.
And we're already seeing that with a very hostile situation unfolding right now, at least with one deal. What is the biggest determinant on pulling the trigger on a deal? I mean, I think, the hostile situation highlights that everybody feels like they could be the number one player. And maybe there's some involved here as well.
There's some of that. I think the good thing with that hostile one is it synergistically fits really well. So the company is trying to acquire the other company. They have something that they do really well. The other company has something that the other one's missing, so it fits. So I think that the key thing is how can you get market share quickly and then somehow maintain it as these additional licenses come online and then defend it. And that's only in Canada, but also overseas. So with that hostile takeover, it gives them a better international platform they wouldn't have otherwise.
And what about the combination of those companies that are going to be best suited to tackle the recreational marijuana market versus the medical marijuana market?
Sure.
Does having them all under one roof make a lot of sense?
No, not really, because the takeout, how they're sort of taken out later on down, the exit strategies are going to be different from medical and recreational. Right now, they're all under one umbrella, typically. There's a few that are going to be very medical, but they're largely part of like a Canopy or part of a larger group. But ultimately, they'll be spun out later on. But there's very few standalone medical companies you're going to see. It's going to be all about recreational for quite some time, because the payoff for medical is a little later down the road, because you got to run clinical trials, you got to do a bunch of things, and that takes a while to sort of turn into patents, etc.
So you wouldn't be surprised to see investor enthusiasm continue for a lot of these names. You wouldn't be surprised to see more consolidation in the industry. You wouldn't be surprised to see a few boutique names that can make a name for themselves. But let's be clear, you do think there are a few names that are not ultimately going to survive 5 or 10 years down the road.
Yeah, exactly. I think, in 2017, you had the top 5 go up by 300%. You had the top 10 go up by 200%.
In terms of their stock
values. In terms of their stock price value. I think we're not going to see that this year. I think they're going to outperform the broader indices. But I think most of them will reach the apex of their potential in 2018, and then they'll sort of parry down from there.
And what has proved to be the biggest challenge for these companies who are trying to scale quickly? Behind the scenes,
sure.
What do you really have to think about as an investor?
Fair enough. And this hasn't been reflected in the stock price. Execution of being able to grow at a large scale. So even the incumbents that are large today, when they go from 100,000 square feet growing facilities to 200,000 square feet, a lot of things fall apart. The consistency, the quality, the output, they have to relearn the process over again. When you go from 100,000 to 500,000, same thing happens.
Yeah.
So it's challenging. I mean, right now, there's for a lot of the large guys, there's still a lack of consistency and quality in product, which is why the black market is still thriving, because they can grow in smaller facilities and without the controls and rules that these guys are unfortunately sort of subjected to.
And what kind of communication is taking place with the government as they grow their business substantially? I mean, obviously Ottawa's keeping a close eye. The provincial governments are keeping a close eye because they want to know as well. And they're trying to figure out what the demand is going to be for the recreational product. But is there like daily phone calls? Are they visiting the facilities? Or is it kind of being left to these private companies to get the sale, get ready to go, and then we'll talk.
I know there's a lot more communication now than there was in the past because Ottawa's figured out a lot about, they did a lot about cannabis a couple of years ago. Now they do.
Right.
So they're helping more so the next stage of guys sort of get up and running quickly, learning from the mistakes the first wave or two had made, and some of that indirect learnings are being transferred via Ottawa to the next stage of licenses. So that's going on. But yeah, it's very much of a collaborative effort. But still, if you get a new license, it'll take you a while to get any product out the door.
So you've got this situation in California,
Yes.
which sheds even more light, more curiosity. More people start talking about, boy, cannabis, illegal cannabis, stocks tied to that. Does that help the Canadian industry, do you think?
I think it does from an eyeball standpoint. So rec went live in California this month. It's a precursor to what we're going to see up here. The problem is you get a lot of eyeballs in the Canadian markets, particularly U.S. investors. We can't really invest in U.S. cannabis stocks very cleanly, so that invariably a lot of money comes up here. A lot of the money that's been raised over the years for Canadian cannabis stocks has been American capital. This will help fuel that a little bit further as well.
And this investment by Constellation Brands within the last few months in Cannabis, for example, a lot of people saw that as a key milestone. Do you think there's going to be similar moves like that from international companies that are taking toeholds in some of the Canadian players?
Yes, I think they will. I think the Constellation one came a little quicker than we thought it would, but we were expecting it at some point. Yeah. What happens is it's the industries that are going to feel the most competitive sort of anxiety from cannabis becoming a legitimized large market will step in to sort of cover their flank by getting a piece of it. So liquor, obviously tobacco down the road, and potentially pharmaceuticals.
Yeah, lots to watch for. Kerm, thanks as always. Kerm Malik, partner and head of research at Jacob Capital Management.